Hello there everyone, today's video is all about sideways loss relief. So sideways loss relief, a very valuable form of losses in the tax world where you can set it off against other income. So what is it? Who does it apply to? Well, this video we're going to take a look at that. So predominantly we're looking at individuals but also partnerships. So it's individual tax, not corporation tax. There's a separate set of rules for how losses work for corporation tax, but this is for individuals. Now, assume you have someone who has a trade, they're in business doing something, and they also have other income going on, whether that be employment or property income or dividend income. And basically, the sideways loss relief rules say that you can, if you're making loss on your trade, you can move it sideways and set off against your other income. So here's an individual here. They've got a trade doing something. It's making a loss. Hence, sideways loss relief to reduce their tax bill on whatever else they've got going on over here on their other income. So sideways loss relief, very valuable because it's not as if it's trapped over here and you have to wait for this trade to hopefully make a profit in the future and then set it off against. You can set it off immediately against other sources of income. So people will always want to try and claim this if it's applicable and it applies to their circumstances. Now, the rules on sideways loss relief are basically twofold. Two strands to the law that says, number one, this trade has to be run on a commercial basis. So you have to be running it as a trade on a commercial basis. And secondly, has to be run with a view to making a profit. So commercial basis and view to making a profit. If those two things aren't in play, if they don't apply, you cannot have this sideways loss relief and it will be denied. So it's interesting to illustrate just a few court cases where this has been tested because, you know, the law, that's all it says. So what is running on a commercial basis? What is a view to making a profit? You see, the tax law can't be written for all sorts of circumstances. So often it's tested through the courts to determine, you know, what exactly do these two lines mean. So, but before we go on to talk about the some court cases, in terms of this sideways loss relief, it can be against other income in the current year, the previous year, or a combination of both. So it really is a valuable form of loss relief, this sideways loss relief. Now, let's have a look at some cases. First case, interesting case about a guy who was in a horse breeders syndicate. He was actually a tax advisor, a profession I know very well. He was a tax advisor to the equine industry. That was his sort of 9 to 5, if you will. But also, because he was so into the whole horsey thing, he invested in racehorses, in syndicates, and he had 10 investments in different horses, or he owned a leg of a horse or whatever, or a part or a syndicate. And on his tax return, he had his income from his tax advisory business, and then he had a separate page for self-employment, which he had labeled in the self-employment pages of his tax return as being a breeder of thoroughbreds. And basically what happened is that he claimed sideways loss relief because the horse racing, the investment in the horses, it didn't do so well. The horse racing didn't work out, and he made a great deal of losses that he tried to offset sideways loss relief against his income from being a tax advisor. HMRC took him to court, and the tribunal sided with HMRC. Basically, it failed on the point of running on a commercial basis. They said, look, this guy doesn't even have a trade to begin with. He doesn't have any say on buying and selling the horses. He's just part of a syndicate who's training the horses. in other words, it's more of an investment, not a trade. So they said, look, we don't even have to get on to strand 2 to see whether or not it's going to be making a profit. It was making a loss, but it wasn't even a trading loss to begin with. It was an investment. So it was deceptive that he was on his tax return, that it said he was in the business of being a thoroughbred breeder. No, he wasn't. Basically, he was investing in a few syndicates in the horse racing industry. So, sideways loss relief denied. Next case, interesting case. Again, it was denied. The taxpayer lost. This was a yacht charter business. Now, this was a partnership. Now, again, partnerships, remember, they're transparent for tax purposes. Partnerships don't pay tax in their own right. It's the underlying partners who pay the tax. So this yacht chartering business was set up. There was a couple of guys in partnership together, and this thing didn't make any money. And it was a business, though. It was a business, but it didn't make any money. So again, challenged by HMRC, went to the courts, and what happened was that when the courts looked at these 2 tests, the 2-pronged approach to see if you get sideways loss relief, they said, yes, it's run on a commercial basis, but there was never any view to it making a profit. And these guys said, hang on, of course there was. That was our intention, was to make a profit out of this. And the tribunal said, no, it wasn't. Any businessman worth its salt would have looked at the forecasts, what you were predicting in your business plan, and you were never going to make any money on this yacht chartering business. The depreciation alone on the yacht year on year more than outweighed any income from the occasional sailing days that you had this thing chartered, notwithstanding the fact that they also used it for personal pleasure as well, but they did charter it the odd day. But basically, there was not a view to making a profit. There was no evidence from the outset that this thing was ever going to turn a profit, and it was just not qualifying, not passing that strand of the test, even though they'd set up a limited liability partnership and they were trading it. But strand number 2, not passed, no view to making a profit. So that's the yacht charter. Third case, farming business. Now, this is interesting because this did succeed in the courts. So again, there was losses. There was a farming business that had made losses for 17 years, and the guy that owned the farm claimed sideways loss relief against other stuff he had going on. Revenue denied it, went to the courts, and the courts looked at this and they said, actually, even though there were losses for 17 years before it finally turned a profit, nevertheless, there was a view to making a profit at some stage in the future. It doesn't have to be an immediate view to making a profit, as long as it's making a profit at some point. And they even had expert witnesses and farming experts that came in and said, look, at the point that this guy acquired the farm, it could have been forecast that it wasn't going to make a turn until, way down the line, 10, 15 years. And they proved that. Expert witnesses were able to show that there was never any hope that this thing was going to make a profit in the short term. So this particular claim for sideways loss relief was actually favourable for the taxpayer, and they won in the courts. So that was sideways loss relief not being denied, but it was accepted, even though there was losses on the bounce for 17 years. But that long-term view nevertheless held that ultimately it was going to make a profit, which it did eventually after more than a decade. So some interesting court cases there on the racehorses and the chartering of the yacht and the farm about sideways loss relief, and how, in order for it to work, you have to satisfy that 2-pronged test. Are you running the thing as a commercial venture? And secondly, is it with a view to making a profit? So food for thought there. If you have got trade and other stuff going on, which many people do these days, especially with a gig economy and all sorts of things, have you got a job over here, or investment income over here, or property and something else, a trade, and if this is making a loss, if it qualifies as sideways loss relief, you can move it across here and set off against your other income. But you've got to jump through the 2 hoops, trading and view to making a profit. So hope you liked this video. If you did, please do remember to subscribe, and I'll see you soon.